Today we're going to look at my holding, Civitas Social Housing. This is a REIT, which is a real estate investment trust. This means that the company has to pay 90% of its profits in the form of dividends, and to be a REIT it has to have a substantial interest in property. And Civitas Social Housing plc, United Kingdom based closed-ended investment company and a real estate investment trust. The company's investment objectives is to deliver sustainable returns to its shareholders by making investments in care-based community housing. So basically they invest in specialist housing where long-term people can live to their best abilities, and the upside of this is the rents are indirectly paid by social services or the government, so it's a nice rent secure investment. I invested in this company. We'll have a look at the history. I purchased the shares back in 17th of May 2021. I paid £500. They pay a good dividend. I've had several dividends: 4.58, 4.70, 4.70, sixpence, 4.65. The current price of my holding is 88.92 pence. That's the price per share. I'm down £121, which is less 24%. But if we look on this market beat site, analysts' opinion, Civitas Social Housing has received a consensus rating of buy. Price target upside downside. According to analysts, consensus price target is 124, which is an upside of 40%. I'm down 20%, so technically my holding can go up another 20%. There's a 20% profit there I'm sitting in. And if we have a look at some other commentary, this is what the community rank the stock as. 140, 33 people think that'll underperform. 125 people will believe that the stock will outperform. So there's a higher number of people thinking the stock's going to do well, opposed to not doing quite so well. The next observation here is the dividend payout is 6.28%, which is a nice healthy dividend. And insiders buying versus insiders selling. In the past 3 months they've bought £29,000 worth of stock, so it indicates they must have some faith in the company that they own or are involved with. The price to earning ratio is 14.95, and it's slightly more expensive than the market average of 11.58. And regarding the sector, that's about bang on. Price to book ratio is 0.81. This is quite interesting, and it says here anything below 1 indicates that a company could be undervalued with respect to its assets and liabilities. And we're back there, and if we go back to the Trading 212 platform, there's another interesting little snippet that I like to look at that may persuade you to consider that the company might be worth investing in, and that is the where are we? The price, your investment sell, company details, history, instrument securities lending, company details. Here we go. Financial summary, sector, employees, it's cash flow, history. It might be on the other one. Hang on, I will go back to market beat, and that will tell us the let's got some more financial information here, price to book, etc. I'm looking for the price of the share over a period of time. Let us have a look. Where are we? These are company details, the sales, profitability, the debt, price to earnings, outstanding shares, company calendar, market beat. I don't seem to have that information to hand at this immediate minute. I'm looking for the 52-week price average, or price, how the price is fared. We might have it up here. Hang on, it could be up here. 52-week range, 81.4 to 121, and we're sitting at the lower figure at 88. So over 52 weeks, this value of the stock has been a lot higher. So it's another reason to consider purchasing the stock. So Civitas social housing, it's a REIT, real a real estate investment trust, where a large proportion of the company's profits has to be paid out in dividends. It pays a good dividend, and it's a very ethical stock to own, because they are actually creating housing for people who otherwise wouldn't be able to live in the community, because they have to be adapted to suit their very particular needs. On a financial point of view, these are long-term residents, because these houses are particularly adapted to their particular needs. And another upside is the rent is more or less virtually guaranteed, as it's indirectly paid by the government. So very, very ethical stock, good dividend payout. In my situation, I'm down on the value of my stock by about 20%, but that's projected to rise 40%, so I've got a 20% profit if I'm more capital appreciation, and we do get some nice dividend payouts, as you see. Hope you found this interesting. Civitas social housing share, it's a REIT. Until next time, I bid you a really successful investing adventure.